Eric's work helps to bridge the gap between traditional finance and emerging assets like Bitcoin, and his insights consistently guide investors and analysts alike through complex financial territory. He's also the co-author of the acclaimed book, The Bogle Effect, which explores the impact of John Bogle and Vanguard's innovations on the world of investing. So if you're at all interested in what's going on in the world of US ETFs right now, then this is the talk that is for you. It's called Bitcoin ETFs and the Mainstreaming of not just Bitcoin, but crypto. And I'd like to welcome to the stage Eric Balchunas, Senior ETF Analyst at Bloomberg Intelligence. Eric, I will hand you a clicker. Okay. There you are, sir. Best of luck.
Thank you very much. Good morning. My name is Eric Balchunas. I am Senior ETF Analyst with Bloomberg Intelligence, AKA a TradFi suit. At least that's what I'm told on Twitter constantly. I don't feel like one. I feel a little cooler. You know, ETFs are the disruptive vehicle of Wall Street. It shares a lot of common traits with Bitcoin, in my opinion, and that's why I dedicated my career to ETFs about 20 years ago. I've been doing this for quite a long time, and I've never seen anything like what we saw in the past year. My head's still spinning from it all, and I want to share with you some of the monumentalness of what's going on here. The ETF is bringing Bitcoin mainstream in a completely legitimate way, and it's going to be big. So just a few slides. This is a disclaimer. Don't need to read that. I'll probably break two of the rules at least. This is where I come from. Bloomberg Intelligence is the research arm of the big Bloomberg mothership. There's 475 analysts. They cover stocks, bonds, and regulation. I manage a small team that covers ETFs. Some of you may know James Seyffert. He and I were like Batman and Robin covering the ETF launch. We were all over it. And he's more crypto native than I am. I'm admittedly a tourist, but I've kind of gotten the swing of things. I'm a fan. Especially Bitcoin. I really get it. And so I've kind of joined him in that. The rest of the team, not so much. They're a little lukewarm on it, but that's okay. Okay, some hot takes on what happened and what will happen. So the first is there will never be another ETF launch like this again. I promise you. First of all, it took 11 years to get this puppy approved, okay? The record for the longest approval was SPY, the first ETF. It took 4 years. So 11 years is ridiculous. So everything about this starts to get ridiculous from this point on. And there's the actual statement that made everybody go crazy. Remember January 10th? It was like war is over. Finally, Gensler, Grayscale beat him. It's over. It was wonderful. I was also happy because James and I spent 6 months in a state of this. We were analyzing S1s, remember those? 19B4s. Every little detail. What did Gensler have for breakfast? We kind of lost our minds in a good way. We definitely built a new fan base, though, and I think explaining ETFs in the traditional finance world, especially on social media, has been really fun. The other thing is, we called it the Cointucky Derby because this is the first time ever 10 ETFs launched on the same day. Normally, you file and you launch when you file proportionately. So if you file first, you're ahead of the pack. This time, the SEC grouped them all together and said, you're all launching the same day. So it was a great experiment. Who will win? Who will lose? Other variables we could look at. Do fees matter? Do volume? Distribution? So we were just loving this. And it broke records right off the bat. So the newborn 9, XGBTC, were the fastest ETFs to ever get to $1 billion as a group. And individually, they all made the top 10, or at least 4 of them did. And after 50 days, if you take all, there's been about 12,000 ETFs launched in the world in the past 30 years. If you rank them all by their assets after 50 days, this is the list. So IBIT just utterly destroyed everybody, and so did FBTC for that matter. ARCB is on there, and even BitB, which was the 4th one, was more than GLD. So think about that. Again, anomaly. This chart's crazy too. So if you look at all the ETFs and say, how fast did the first one get to $20 billion, IBIT did it in 137 days. The next fastest was JEPI, the popular JP Morgan active equity ETF, that did it in 938 days, 85 days, almost 1,000 days. So again, this is crazy stuff here, right? Why did this happen? Well, the big thing is they all got cheap right before they launched. If you look at the fees of these things, they're all between 15 and like 25 basis points. Look at ETFs and trusts and hedge funds all across the world. You got to pay 1 to 2%. And the spread to trade them is 1 basis point. Compare that to Coinbase or other exchanges. So you're talking about lean, mean, cheap, and hey, by the way, they're totally regulated. So this was a very powerful combination. If you look at advisor surveys, their top 3 most important things in selecting an ETF are fees, brand, and liquidity. These had all 3 like on day 1. So unless you hated Bitcoin, you're at least going to give them a look. And that is a powerful combo, and that's why, again, the flows break the record. 23 billion is the number as of now, year-to-date flows. Our estimate was 10 to 15 billion. So it's already gone way beyond our upper band. They've got about 60 billion in assets. You know, that's about 60% of what gold ETFs have already. So we think they'll probably pass gold ETFs in the next, year or 2. Now, the trading volume was also really good. As I said, liquidity matters. So if you look, GBTC was very highly traded. Everybody traded that trust. But you can see when the ETFs launched how much bigger they traded versus GBTC. Sometimes they were trading 1 to 2 billion a day. If you trade $1 billion a day, you're good. Anybody will take a look at you, even a pension. Liquidity is underrated. When I tweeted about volume, some of the people were like, I don't care about volume. I just want to see the assets. Well, volume matters because volume is big fish bait. If you are a big investor, you will not even look at an ETF unless it trades 100 million, 500 million a day. And if it trades $1 billion, well, it's great because they like to go in and not be seen. They don't want to move the market. They don't want anybody to know they're there. So once you get big volume, institutions will take a look at you. And if you look at all the launches this year, there's been 510. The top 4 are Bitcoin ETFs. 6 of the top 10 are crypto. There's 1 Ether in there. And half of the top 30. And when we look at the number of institutional holders, this was also ridiculous. You know, big institutions have to file 13Fs on what they hold. And the first quarter that they were due after IBIT launched, you can see the number of filers, 414 for IBIT. That's insane. The other ETFs there are ETFs that launched around January 11th. And you can see they get 1 or 2. The ones at the bottom had 10, which is pretty good. So you can see how ridiculous this is in the terms of the size of the investors that got in early. And then the advisors are also big. IBIT has currently 828 holders, and 500 of them are advisors. Advisors are the promised land for any ETF issuer. Ask them. Once you get into the advisor world, advisors manage accounts for a lot of wealthy boomers. They have 30 trillion in assets. It's a huge pile of money. So if you get in with the advisors, you're good. And so to get advisors early is really good. Now, this is only US. Globally, Bitcoin ETFs also came out. And collectively, they have about $100 billion. So the US is about 2/3 of the whole number. But in places like Hong Kong, they were a pretty big hit. Hong Kong did the same thing, spot Bitcoin and Ether. And you see that they have almost 500 million in assets. Sounds low, but to Hong Kong's market, which is 50 billion, that's the equivalent of 100 billion in the US. So they're actually, in a way, relatively more successful than the ones in the US. And there's this spill-off quality, too, which amazes me. It's not just the spot Bitcoin ETFs that were popular. You throw anything with Bitcoin in the name or near it, you're probably going to get some bites. This is 2x MicroStrategy ETFs, which are the most volatile ETFs in the United States of America. They're about 13, 15 times more volatile than the S&P, and people can't get enough. There is definitely a market for like degenerate gambling in the ETF space, and single stock leverage ETFs are a bigger hit than many people thought. And these two have $1 billion combined after like a month or 2 on the market. Other ones aren't as big, so clearly it's a Bitcoin helping these. And soon we're going to have options. The SEC approved options on Bitcoin ETFs. The CFTC, we believe, will soon give the green light. We think they'll launch in Q4, but definitely by Q1. And options are important. You can hedge your position. You can sculpt your outcome a little more. In GLD, these are the GLD options, they trade the gold equivalent of 3 or 4 billion a day. That's 3 times what GLD itself trades. So options markets are going to help draw more people in as well. And then wirehouses. These are these big banks that have large networks of advisors all over the country. You can see they have 5 trillion, 5 trillion, 4 trillion. This is the real promised land. If you get on their network, their platform, it's like if you sold salad dressing and you got it on the big food store that is nationwide. You're definitely going to sell more salad dressing, right? So that's what these are, and that's why Morgan Stanley took in IBIT and FBTC, but that was the first one. So we're going to slowly see the other ones open up. Now, after all that success, all that optimism, the haters still come out of the woodwork. It's amazing. You guys know some people just hate Bitcoin, and some people just hate Bitcoin ETFs, and I won't name him. Now his new thing is to say that, oh, okay, fine, you got the assets, but you got the wrong investors. These boomers, they have weak hands. They're gonna sell out as soon as the market goes down. I am here to tell you that the boomers are gonna be better hodlers than you think. Trust me on this. First of all, just look at them, okay? They've seen some shit, okay? They've lived through the 70s, the 80s, 1987 crash was nasty. Worst one still to date. 2008, the dot-com bubble. They know their stuff. And if they have found the ETF, they're smart. ETFs are the cheapest, best way, less Wall Street money gets their hands on your money. So if you are in the ETF, you are smart. So they know about behavior. And if you look at the past sell-offs, 2022, 2020, and 2008, ETFs took in money each and every time. Right? So these are people who are like, I get it, markets go up and down, I'm in. So these are good investors. And another reason they're going to be good is because the portfolios have changed. I know a lot of you are all in Bitcoin, but like a normal boomer is going to be 60-40 stocks bonds, real low-cost index funds. That's cheap beta, we call it. But it's boring. You got to wait 30 years for the compounding. So they're looking for some action. Hot sauce. Okay, so hot sauce is like 15% of most people's portfolios. And to me, Bitcoin is a twofer. You get the digital gold store of value dollar hedge, but you also get that juice flow and hot sauce because it can go up quickly. And so to me, it fits in the modern portfolio. There's many brands of hot sauce being launched at these investors. And to me, crypto is one of the most promising and the most legitimate. I mean, I get it. I do believe it helps hedge the dollar, but I do think the volatility can be more of a feature than a bug if you're a 60-40 investor. And the reason boomers are important is because they have all the money. Here's a look at who owns the stock market. Boomers and older people own 70% of all stocks, okay? And the Gen X and millennials own 30%. So getting them interested is obviously just a little bit from them will go a long way given how much money they have. And listen, I just painted a rosy picture. There will be outflows though. My phrase to all of you and the people on Twitter is 2 steps forward, 1 step back. But whenever the 1 step back happens, like ARK had 30 straight days of inflows and then 1 day of outflows, and it's like the babies come out crying, wow, Cathie Wood ruined us. I'm like, dude, look at that chart. Are you kidding me? My recommendation is to not look at the chart every day, all day. I would look at a 5-year rolling return of Bitcoin and force yourself to only look at that. It'll be like up 500% all the time. But the daily chart wigs people out. But don't just hang in there. ETFs do get traders, and you will see some outflows. Bitcoin's up 47% since the ETFs launched. It's beating every asset class, and still there's whiners. I don't understand. And it was up 80% on the rumor, right, since BlackRock filing to the launch. So the ETFs really hooked you up. Yet the people still dump on them, blame on them for like a 1-day sell-off. I don't get it, but I think slowly the ETFs will gain the respect of crypto Twitter in particular, but they are just as disruptive as Bitcoin, and I think they should earn your respect. They should not be underestimated. ETFs are benefit-rich vehicles. They're low cost, they're liquid, they're tax efficient, they're transparent, they offer diversification. You can do easy portfolio allocation with them. They standardize everything. No matter what something trades, like in the regular world, it now trades like an equity on an equity exchange, which is the most price transparent. People love that. They're flexible, you can go long or short, they're emotionless, and they're democratic. In mutual funds, if you're rich, you get charged the least. If you're poor, they charge you the most. It's like a regressive tax system. ETFs give everybody the rich people prices. So that's why they're democratic. And they're free and anonymous. So in other words, the anonymity is important for institutions. So when some people trade, we don't know who they are. And the big fish like that. The 13Fs come in later, but when the trading happens, we don't know. And institutions use ETFs for all kinds of stuff. in my opinion, they're going to use these for portfolio completion. Rather than go get a wallet and all that stuff, they're just going to go, just give me IBIT, and boom, done. They'd use that with GLD the same way. So I think that's how they'll treat this. Real quick on why an ETF is so, what's the magic and the secret sauce of an ETF? It's this concept called a warehouse receipt. The guy who invented the ETF ran a commodities warehouse in the 80s. And he said, wait a second, what if we, when you have a bunch of soybean oil, you take it to the commodities warehouse, you stick it in a locker, they give you a receipt. Then you can trade your receipts with other commodities traders without having to move merchandise. And if you get a bunch of receipts and you want your product, you go to the locker and they give you all the soybean oil. Replace soybean oil with stocks, bonds, or Bitcoin, and replace the receipts with ETF shares, and you have the ETF. That creation-redemption two-way street is why arbitrage can happen, and that's why the price is always on the NAV and why GBTC was broken. GBTC didn't have that magic sauce. ETFs do, and that's why people love them, and that's why they're growing so much. This is a look at the quarterly flows into ETFs for the past 15 years. This past quarter, they took in almost $500 billion. That's 30% over their old record. So this product is sweeping the world, and again, Bitcoin and ETFs, I think, are just a powerful marriage in terms of their growth and potential. We think ETFs will grow to $35 trillion by 2035. Right now, they're at $13 trillion, and obviously I'm bullish, but let's say tokens took over. I'm still bearish. I'll give it 10 years maybe. Let's say tokens are direct indexing. We would morph. We will just become token analysts. But we really do think ETFs are the vehicle for the next at least 10 to 20 years. And there's more launches this year than ever, so a lot of innovation is happening here. All the big firms and ideas happen here. And again, when you have that much innovation, I call ETFs the Silicon Valley of the asset management world. Some of those products are really good. Some are crap. Some are really good and end up getting a lot of assets. US spot Bitcoin ETFs will be the biggest owner of Bitcoin this year. So here's the list of who owns the most Bitcoin. You may argue with this afterwards, fine, but it's roughly true. The US spot ETFs own 961,000. It's actually 971 as of this morning. That's 97% the way to 1 million, and it's 88% of the way to owning more than Satoshi. So by Christmas, you're going to see US spot Bitcoin ETFs on the top of that list. And if you break down the companies in here, BlackRock is obviously large. So BlackRock alone will probably pass Satoshi by the end of 2025. And this is really fast-paced stuff because ETFs now own 5% of all Bitcoin after less than a year. It took them 35 years to own 9% of stocks. They own 4% of the bond market after 20 years and 1% of the gold above ground. So to own 5% in less than a year is pretty scary. So in a couple years, ETFs will have a bigger impact in your asset class than any other. So I guess we have to learn to be friends. All right, it's hard to overstate the importance of BlackRock and Fidelity, but mostly BlackRock. BlackRock is ginormous. They have over 10 trillion in assets. Vanguard's close behind, but then there's a huge shelf after that. Fidelity's no slouch at 4 trillion, but BlackRock in a league of their own with Vanguard. And to think about BlackRock getting involved, it gives advisors cover. iShares on a label means you can't get fired. It's like buying IBM in the 80s. So this is huge in terms of the brand notoriety. And to have Larry Fink, because see, Abigail Johnson at Fidelity doesn't do media, but Larry does. And so Larry's going on CNBC and Fox and explaining how this should fit in a portfolio and why it should. Powerful stuff. Advisors feel comfortable now. They also write these white papers explaining Bitcoin similar to the way you would. This is written in boomerese, too. So boomers completely like the way it's designed, the pictures. It's a little softer than you might see a presentation here. And speaking of that, Jay Jacobs, who is a very slick presenter, I know him well. He runs the area that has the IBIT. He's on the road now, and he's showing charts like this. This is the purchasing power of the dollar since the Fed was created. I mean, usually you'd have some anonymous person on crypto Twitter putting this out. And now BlackRock is traveling the world showing people this. Life moves pretty fast. Vanguard may eventually lighten up. Vanguard is the second biggest issuer. I wrote a book about Jack Bogle. I'm a fan of Vanguard. I invest in them. I think they're great. They're true punk rockers. If you really look at what they did and what Bogle did, I think you'd identify a lot. He disintermediated a ton of middlemen in Wall Street You guys have a lot of spiritual connection, even if he is TradFi. So, but they don't, Bogle didn't like commodities. And so Vanguard's DNA is like, we just don't like stuff that doesn't have like cash flow. That said, they do let GLD trade on their platform. So it's a little personal. I don't know why. I think they should just let it go. I don't like that nanny state thing. Just their investors are smart, let them decide. I'm not a fan of it, but I'm a fan of Vanguard. I don't like this decision, but there's 2 reasons I think you should be optimistic. One, Vanguard is trying to grow its advisory business. So Vanguard's advisory business means take like a 60-year-old person with a bunch of money. I'm going to manage all your money, do your taxes, estate planning. If that person wants private assets or Bitcoin or anything outside of normal stocks and bonds, I have to get it for them or they're going to fire me. So they're going to have access to crypto, especially as younger people get older and inherit that money and they're a little more into crypto. I think it's going to squeeze them to do it. The second thing is their new CEO is the guy who used to work at iShares who fathered iBit. So this guy, Salim Ramji, is obviously into this stuff, very open-minded, but Vanguard is so cultish, Salim Ramji will not be able to penetrate that mindset in a year or 2. This could be like a 4 or 5 year process. So stay tuned. I wouldn't say lose hope. And some people on Twitter is like, oh, Vanguard's going to go the way of Xerox. Like, just because they won't do this, relax. Vanguard isn't going anywhere. They take in more money than anybody. Like, the Bitcoin ETFs have 23 billion in net flows this year, and everybody's going, yeah, it's great. Vanguard does that in like 3 weeks. So they are massive and very beloved by their investors. Ethereum ETFs will be lucky to grab 20% of assets in this category. So far, the Ethereum ETFs are negative 500 million in flows. Grayscale had an unlock. Now, in the Bitcoin case, the new 9 was able to overwhelm the unlock of GBTC. That's why they were like superheroes. These are not superheroes. They're just not strong enough to overwhelm the unlock. And so you're going to see a flatness around the net year-to-date flows for a while. When the unlock ends, though, I do think Ether will start crawling out into the green and eventually get some assets. If we look at Ether versus Bitcoin in other countries where they have ETFs, Ether has decent market share. Up to like 8 to about 35 is the range. So I think if they get 20% of the market share, they should be pretty happy. Ether could be the silver to Bitcoin's gold. So in the precious metal space, gold has 111 billion, Ether has 17. Silver has 17 billion. And if you look, there's a lot of people hopeful about these crypto basket ETFs where they put all of them in one. Grayscale has a filing. I don't know if those are going to jump off the shelves because there's a precious metals ETF called Glitter that has gold, silver, platinum, and palladium. It's got 1 billion. It's okay. But I just think Bitcoin is going to dominate this space. I think a very normal investor who maybe they're not into the mission, they don't care, but they just want to cure future FOMO and not kick themselves if it goes to 1 million, they're not going to be like, oh, let me get all the coins. They'll be like, I'm good with Bitcoin. So I just think Bitcoin is going to really satiate the normal crowd. Now, there will be a couple, I think, that will get into this. And you may find them actually leave the ETF and go direct. You could find some converts who really start to read up on this. It's interesting. I wasn't that knowledgeable. I read a couple books. I get it. If you believe the U.S. government is going to, and any government, is going to print their way out of every problem going forward because it's politically expedient, it's hard not to take this stuff seriously. And as these people, start to see that, and Jay Jacobs shows the decline of $1, and real returns are used more than regular returns, I think you're going to see some adoption. But again, Ether, the tricky thing is, how do you explain Ether in like a soundbite? Bitcoin is digital gold. Fine, great, love it. I call it gold as a teenager. It's like 17 years old, it's giving you attitude, it's going to steal the car. Gold is 4,000 years old. So it's volatile. I say embrace those traits, as I said earlier, because it gives it a little hot sauce element. But to me, digital gold or young gold is a very easy way to understand Bitcoin for someone who's not into this. But here are the 3 most popular ways that people thought on Twitter to quickly deduce Ether. Digital oil, programmable money, and world computer. They all sound cool, but what does that even mean to a normal person? So I just think Ether is going to have to really try to distill itself into something a little more catchy to get some looks inside the 60-40 world. Okay, other coins. Solana, XRP, There's 2 filings here, and there's going to be more probably down the road. Now, these ETFs exist in Europe, and they run fine. 21 Shares has all kinds of coins, so we know we can do them. It's just the SEC isn't into them, this SEC. So to me, these filings are a call option on a Trump victory, because if Trump wins, A, he will definitely put a more libertarian SEC chair in there. Hopefully Hester Peirce, I'm a big fan of hers. I think she would approve these. But somebody who would at least take them seriously. Plus, I think he feels a little indebted to the community, given some of the support he's gotten. So I think if you see a Trump victory, watch this space. If you see a Harris victory, just forget about it for a couple years. Here's a couple ways to find me for free if you don't have a terminal. I also wrote a couple books, shameless plug. The ETF book in particular is really good if you're just looking to get a handle on what this world is. I would learn it. I would embrace it. I would get smart about it. You can see the numbers. It's coming, and it's coming fast. So that's my presentation for today. Thank you very much.